From crude to copper, and more specifically gold and silver prices, the entire commodity complex has undergone a bout of selling, and I would like to put a little more emphasis on gold and silver. The reason being that, okay, you see a little bit of correction in crude, in copper, which have hit levels of $75 and $10,000 per unit of their respective commodities. But when you see gold and silver, which has anyway been quite an underperformer right from day one of 2021, continuing to tank along with the rest of the commodity complex, it's pretty disheartening. Now, of course, as we speak, there's been a bit of a recovery that has kicked in. This after gold hit 4-month lows, and crude also hit multi-month lows. But yeah, I think the question at this point of time is that firstly, the trigger was the fact that the US dollar was extremely strong. That in turn was because there were calls about the Fed tapering coming closer. So just if I have to rewind the clock a little bit, there was any which ways weakness in the entire commodity complex. But what really got that weakness going very strong is when on Friday we had the US jobs data. It was a very strong number, 943,000 payrolls added for the month of July. That's a very strong number. And that in turn is something that sent your US dollar spiking up. It went beyond 93 on the index. That in turn immediately led to a sell-off in gold. Gold prices went plummeting to, in fact, as low as even sub the $1,700 per ounce mark, $1,600 per ounce mark, in fact, before making a massive recovery. So many are calling it also a flash crash of sorts. Silver, interestingly, plummeted even further. So we had that gold-silver ratio really rising, indicating that the gap between gold and silver is widening because of the quantum with which gold fell versus the quantum with which silver fell. Now, we spoke with Peter McGuire, the CEO of XM Australia, and he says it's the payroll data, it's the strength in the US dollar, the entire inflation story. All of this is coming together as a concoction and, really triggering this sell-off in gold. For how long this sell-off in the overall commodity complex can, last? Well, then he points towards the Delta variant, because that is emerging as a concern, especially in China. So demand destruction could be another reason behind which the commodity complex could fall. But of course, if you have to talk about the possibility of a Delta variant emerging and the possibility of a lockdown again, then gold should actually rally. Well, here is where trading comes in. Peter explains that margin trading really must have come into the picture. With the spot market falling the way it did, there must have been margin calls, there must have been a lot more new short sellers as well coming to the market. And if you're long and you've got a margin call, naturally you have to liquidate a position, which is something that of course concerned a lot of traders. So that action as well further put pressure on gold and silver prices. So I think it was largely the dollar index that gave direction to the commodity complex, downward facing, of course. Let's see how things shape up on the variant front. We'll have clearer cues next month, when the Jackson Hole conference will take place from the Fed. And that, I think, will be the next watched out event for the dollar and consequently commodities as well.